We're kicking off a new trading month, but we're seeing holiday-thin trading conditions. Here in the U.S., the Nasdaq has hit another record high, but overseas we're seeing quiet trading because of the May Day as well as Labor Day holidays. Joining me ahead of a new trading month is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, as we kick off a new trading week, we have a lot of economic data to digest, and we have some risk events this week, including the second round of the French presidential election, as well as the Fed rate meeting and U.S. jobs report. So what do you think is important as we head into this week?
Well, look, I think it's the macro news. You know, the earnings season now has established itself. It's been a good earnings season. Earnings are continuing, but I don't think the market is really going to focus on that. That may not be the true story of today because, you know, it's a holiday, May Day, and most of the global markets are shut down. So volume is rather light. And so, you know, the earnings and, of course, the economic data that we got today, by the way, they were all pretty much on the soft side. And, you know, and I think the reason for that is because people are getting very leery now. And when I say that, I mean, you know, they're beginning to scrutinize what the administration may or may not do. And so we're seeing a pullback in a key component for economic growth, and that is spending. We saw the spending basically flat. Personal income up slightly, but still a good number. The ISM manufacturing index still in growth mode, but certainly off of the levels of last month.
Well, indeed, we'll continue to monitor any developments that are coming out from Washington, D.C. But as you mentioned, last week's first quarter GDP report was weaker than forecast, and that PCE inflation figure was also important. But at the end of this week, we'll get the non-farm payrolls as well as unemployment figures and the wages. So what will you be looking for in those figures?
Well, to begin with, we're not looking at a great job number again. We're looking maybe 165,000 non-farms, which will be up from the previous month, but nothing, you know, exceptional. And unemployment rate unchanged. Work week probably sluggish. In terms of weekly hourly wages, up maybe about 0.7%, a little bit on the high side, but again, nothing too explosive.
And last but not least, because you mentioned the word explosive, we have some geopolitical risk that we need to keep in mind, as well as political risk. While I do have you here, I do want to ask you what you thought of the election results, at least for the Italian Democratic Party, in the fact that Renzi did get the majority vote for the primaries. So what do you expect from that?
Well, you know, Renzi now is back as the leader of the Democratic Party, whether or not when the elections do happen, whether or not he'll be elected as prime minister, that's still up for grabs. But I can say this, that, you know, with less than a week to go with the second round of the French elections, the markets seem that they're not putting too much concern unless there is an upset victory. And then, of course, tomorrow we have the two-day FOMC meeting. I don't expect the Feds to raise rates at this time, but I do think that, you know, they will once again beat the drums on perhaps beginning to shave their balance sheet.
Okay, Peter. Well, thank you so much for joining me at the beginning of the month as well as the week, and I'll speak to you next week. Thanks for joining me.
My pleasure.